Hi guys, so Steve Chappell here, Director of Trading Systems Development for VectorVest, been with VectorVest. This will be 19 years in October, so I would say for most of my working life at this point. And it's been quite a fun ride. You know, it really has, learned a lot, and the most I've ever learned was from the founder of our company, Dr. Bart DeLito, and I've worked with a lot of big names, you know, and so it's been a great place to be, and will continue to be, I hope, till my dying days. But now for my three picks. All right, so first one's going to be, I guess I'll just go down the order in which they're listed here. So BTG, B2 Gold Corp. I went with a junior. This was the explosive
hot stock
picking panel. So I tried to go through and sift and find some juniors that that resonated with me, because as you know, they can move the most when things are good for gold. First, one thing that we should do, a lot of us have gold picks, and I think on the back of the special presentation from this last week, but most importantly because we all feel like gold has room to travel here. And what I mean by that is you're heading into an earnings season that is likely to be just awful. And I realize that a lot of people already understand that going in, got it. But let's see how they feel about that after they go through about 3 straight weeks of those kinds of numbers. So that's going to, at the very least, create some uncertainty. A lot of companies are going to pull forward guidance if give anything, you know, that kind of thing. And you've also got the election coming into full view. There's certainly no shortage of uncertainty, I think any of us would say, about the coming election. There is, you know, all kinds of other things that we don't need to go into. Most importantly, though, the weakening dollar is really sort of the main catalyst that you got to understand. Gold thrives under uncertainty, and even more with the weakening dollar. And we're in those times right now. So I feel like gold, you're going to see some wild projections out there. You're going to see guys calling for $3,000 an ounce, which, by the way, right now is about $18.24 an ounce. Last time I saw or checked. You're going to see anywhere from 3,000 to 10,000. I saw one, and it's a big newsletter, okay, with lots of followers. So, you know, we're not the only ones that are on the gold train. People understand these kinds of economic forces and how they work. And we've really been bullish. VectorVest has since June of last year. You know, so hopefully a lot of folks that use VectorVest and subscribe have already made a tremendous amount of money in gold stocks. So quickly, Glenn, I think this is worth showing. Pull the Huey up on a graph if you don't mind. I mean, since we got 5 gold picks or something like that.
Well, each one, yeah.
Yeah, and they're all miners for the most part. The Huey is the Gold Bugs Index. This deals specifically with, with gold. You would say the GDX would be closest to the miners, but we follow the Huey. With the Huey, you had a close yesterday. Today's Wednesday, right?
Yeah.
With COVID, I can't remember what day is what and what month is what anymore. But you had a close above resistance on pretty good strength yesterday. Gold is up again today, so you're kind of getting that confirmation candle that Jim was talking about earlier, unless something major has changed in the last hour or so. So long story short, we should be bullish on gold here. There's a few moving averages on the screen. Long story short, you know, same moving average techniques apply here. The short term is over the long term, bullish. We have an indicator on the bottom called relative timing. In here, what we do is we use a 40-day average. Gold is very volatile, okay? And so all of these moving averages have been smoothed. And, you know, basically you're seeing a lot of strength. That indicator is 0 to 2, and on a 40 average, it's coming in at 1.5, right? Some people might say, well, I see a little bit of divergence there. I addressed this in the special presentation, but I feel like we should address it again now. Click 10 years at the bottom there, would you, Glenn? And scroll back a little bit further. Go back to the 2009 low. So we've entered into the another era of quantitative easing, right? Well, the last time that we did this in a big way was coming off the back of the financial crisis. And I want you to kind of look at what gold did for the next several years right, as more and more quantitative easing was brought to the table. And I also want you to notice that there was an initial peak on that RT indicator back there in early 2010, I believe. No.
This one?
Yeah.
Okay.
So that's off the blast off on gold. What you have right now is kind of the blast off on gold off the recent lows, okay? My point being, don't pay as much attention to that divergence as some people might, because you might see a lower high type pattern for years. As more and more quantitative easing comes to the table, and I think we might all agree that more is going to be in order at some point, if maybe sooner, if not later, right? Gold has a place here, all right? So I'm just trying to give the case for gold. Now let's go back to the stocks, okay? All right, so with BTG, again, it's a junior. Main reason why I picked it there. It's got a little bit of good strength today, up about 2.25%. The relative value is very strong. So this stock versus a similar investment in a AAA corporate bond, you're going to get a much higher return over a 1 to 3 year time horizon. At least that's the likelihood. It's relatively safe for a gold stock, actually. Most people in VectorVest are keen now to the point that good safety stock is going to run you about a 1.4 or above. That's retirement services back here. But in the gold space, I think there's only about a handful of stocks that have an RS above 1, just to give you an idea there, because gold's volatile, as we mentioned. Okay, so it's hard for them to string together a number of very, very strong consecutive quarters for years and years. The timing, though, is quite strong at 168, so it's got a good combination of those three factors. It's got tremendous upside potential. It's relatively safe, in particular to its industry group, okay? And it's moving in price quite strongly. They've got a 36% earnings growth rate. They are making money. And for juniors, that's a good attribute to have there as well. So that's BTG. Let's then look at JNUG or Kirkland. Kirkland's next on the list. We're going to go from one end of the spectrum to the other, and then we're going to look at the charts, okay? So Kirkland, I would consider best of breed for all gold stocks. They are a big, big company. They come out of Australia. And of course, Australia sits on a pile of gold. Last news wire I saw on Kirkland, before it kind of fell off as most gold stocks did, was they're sitting on about 5 years at minimum of reserves right now, okay? And that's a that's a lot of reserve to have on hand. If you come out to the right, and we start going across, they've got really strong relative value for the price level that you're at. Now you're up in the $47 price level, okay? That's a really high relative value. The safety score is, of course, stronger for many of the reasons just mentioned. The timing is also a little bit better. And they are I believe this to be true anyway, they're the most widely held by hedge funds, okay? You got 26 growth rate there. Earnings is in the 350 range, I believe. So they make a lot of money on top of the strong growth, 3.25. All right, so that's Kirkland, and then we're going to go have some fun with JNUG. This is the hot stock picking explosive panel, right? So it's not going to get any more potentially explosive than that. The one thing I'm going to say here is JNUG represents the junior gold miners, but it's leveraged. It's 3-time leverage fund, okay? So basically when times are good for gold and the junior miners are rising, like a B2 Gold Corp, that would be one of the stocks that is made up of the JNUG fund, which would include other stocks like Kinross, Sandstorm, and a bunch, EQX most likely, and a bunch of others. It plays the whole space, okay, the whole field of juniors. If you come across, we're going to normalize the fundamentals because they are diversified in terms of quantity of companies. What we're going to pay the most attention to is the timing, and it's got one of the stronger on the list. Besides, looks like a couple of the energy stocks, which energy has been performing quite strongly. So that all makes sense, right? Let's look at the 3 graphs, and I'll try to speed things up, guys. Okay, so wherever you'd like to start is fine. This is Kirkland Lake. The one thing I would say here is you just recently broke swing high resistance and did so in a big way. I would say that this one shows conviction. The only other thing I'm going to point out here, if there's one stock besides one that Jim and I were looking at as well, if there's another one on this list besides Newmont to hold, this is the daddy right here. Go to the 5-year chart at the bottom. Reason I would say that is if you look at the earnings per share on the bottom there, that's about as smooth and steady as you're going to find. In fact, I think it is the smoothest and steadiest you're going to find over this period of time in this space. They do pay a dividend. The yield is not quite as good as Newmont's because they raised theirs a bunch this year. Jim will talk about that, I'm sure. But they do pay a dividend. It's exceptionally safe, and that's why I would pick this stock. I don't care about resistance because I'm playing gold for the long term with a company like Kirkland Lake and for the reasons I mentioned when I kicked things off.
I like the stock on a longer term graph. It was beautiful until it wasn't. And then it's getting more beautifuler again. Yes, that's a Glenism. I like off of this swing low, higher lows, running higher now, coming off a level of resistance, breaking through, as Steve said, in a good way, in a big way. The stock's got a little bit of ways to go to get to the high, but I think that with the things that Steve said about the weakening dollar, about all of the stimulus, and yes, something else I've been talking about in Trending Thursday is the stimulus. As we put more out there, the dollar eventually is going to say, I can't sustain this, and it's going to become a weaker dollar, and gold does have a place when the dollar gets weaker and people run to the safety of gold. So a nice update today. You cannot fight earnings. Earnings is the engine that drives a stock's price higher, and this is a beautiful story behind it. Even when the stock's price fell, earnings was still rising, and what is the stock doing? Stock is coming right into fruition with the rising earnings. So I'm all on board with that. Patrick?
Yeah, I can't really say anything else that hasn't been said already. In a good area in the market right now, breaking out past resistance it looks like today. Next test is going to be its high, great earnings. And yeah, it has a new uptrend starting off the lows back in, when was that, Glenn? But yeah, you have a new uptrend starting back then since the 16th of March. Higher highs, higher lows. Yeah, looks good.
Jim?
Yeah, I agree with Steve too. When you're looking at something like this, listen, the pattern here is that we're all bullish on gold. And so some of those technical indicators I'm not going to worry about. It has all to do with objectives. If you believe gold is going to rise and you are bullish on the miners and on gold, I don't really care if it's a little bit below the recent high or wherever it might be. It's a stalwart, it's a main name, as Steve already talked about. And so it's all about the objective. Now, a lot of what we're looking at are miners, and Steve, I defer to you on this. What we haven't talked about is GLD, which is more investing in the commodity itself as opposed to the miners. So GLD, which none of us chose, could also be a way to go. But if I'm looking at miners, Kirkland, or I chose Newmont, but I like the way Steve set it up as your objective, right? Longer term, hitting a higher high today or breaking above whatever, I don't really care about right now. I care about the longer term.
Those are the two to own, man.
Yeah.
You know, Newmont and Kirkland are sort of best of breed.
It's always about your objective. What's your objective?
Yeah.
What's your objective?
And what you'll hear in a lot of other places is Barrick, you know, and you hear it on TV quite a bit. If you shake them down in VectorVest, you're going to get better dividends, you're going to get better price appreciation, you're going to get better everything with a Kirkland or a Newmont.
Barrick's another one. I actually own Barrick myself. I didn't pick that for today either, but another great one.
It is a good one. All right, cool. So, juniors, JNUG.
You want JNUG?
Yeah.
Okay.
And actually, I was going to segue into the GLD here, but
Sorry.
the one, no, it's fine. So, we mentioned JNUG covers the juniors, right? So, you are susceptible here to another market force, and that's going to be small companies, right, that when and if a market goes into a big corrective move again, they will get hammered, okay? But if you believe that we're not going to shut down again and that the economy is open and plans to stay there, right? Then the juniors will give you the best bang for buck under those conditions. Long story short, you start hearing things like shutdown. You don't want to be left holding the bag in JNUG, okay? If that's not the case, again, I think this is one that can really run. Not only do I think that, a great way to track JNUG is with the 3 and 8 EMAs. I have been doing this since March, and I have made a tremendous amount of money in JNUG personally, okay? It's set up again here on June the 22nd. That was the time to go after it. You're still in a high momentum move right now. Last time we had a pullback in the stock, we had a similar candle pattern to what we have right now, though. You'll see that doji there. We've got a similar type of action on a current candle. So I would wait here on JNUG for some kind of strength to reemerge, or wait for the next reset, because it will reset. You know, there will be an opportunity. The stock market is going to be around for a long time.
Yep.
At least we hope so. Right? So this might be one to wait for the 3 and the 8 to cross bearish and then look for the fresh signal if you want to play things safe here. And it's not a bad idea when you start looking at triple leverage funds. So my next thing was going to go ahead and just take JNUG out and put GLD in. Right? This was explosive panel, so I didn't pick just the GLD, but you can see the growth here is also pretty strong. 3 and 8 is going to also be a pretty good way to manage things here overall. You know, when markets go sideways, things get a little disjointed. So I don't so much like the 3 and the 8 here on GLD. If you're going to buy GLD, because it just represents gold itself, not the stocks, the miners in any real way, I think the best thing to do with GLD is hold it.
Yeah.
Is hold it. If you believe gold is going higher, this one goes higher, okay? No matter what happens to the stocks in the stock market. So that would be the stance with GLD. And did I do BTG?
No, I don't think so.
Let me speed into that one and let these guys rip that one apart, and then we'll move on. I got to get off the screen here. So this is BTG. This was another junior. Major breakout. So you had 1, 2, 3, 4, 5 attempts to break out. Guess what? We're starting to break out today. A lot of times when you have that many attempts to break out, you're immediately going to get a retest. That is underway right now. I would buy strength off of that gold line that Glenn drew across the top of the screen here. And again, if gold goes higher, this would be a good name to own. They're a junior. They are held by 19 hedge funds. So they're not a stranger. They were also, if you look at the March rally, look how well they recovered from where most stocks got creamed in the COVID debacle. They recovered 100% and more in just a matter of a couple of short months. You don't want to know why? Because that's what the investment community, not just VectorVest, but the investment community thinks of BT Gold Corp. And I'll just leave it at that. You guys feel free to add your opinions.
My opinion real quick is I like the majority of the stocks that we picked up with the smooth equity curves. This one is a little bit more aggressive, but solid that with all of the touches on this level of resistance, it did break out. Today is a level of indecision, a big wick at the top of the candle. Let me put this on the 3-month graph. Big wick at the top of the candle, a lot of indecision,
right,
but some bearishness. And Steve is right. I think that if anything, it should come back and test this now as another level of support. Jim may still think that it's a level of resistance. I think that once it breaks through that level of resistance, it now becomes a level of support. Let's see if it's going to test it, but I'm with him in saying buying it more on strength as it starts to move back up. Today is not the day. Doji.
When you have a 5-touch line break, this is what you're going to get. It's what matters is what happens over the next couple of days.
Yeah, big time.
Yeah, I mean, if I'm trading that based on support and resistance, I like the way that looks. But Glenn, to your point, so that previous day, I don't consider that breaking resistance.
Right.
Okay, if that candlestick closes fully above today, then I'm saying yes, it breaks resistance, trades higher tomorrow. If you're trading it based on a support and resistance strategy, that looks great. And one more thing on the GLD, and from the retirement-minded side here, you want to be careful. We don't talk about them a lot, but that's a great, as Steve said, to hold on to it. That's a great married put candidate, right? I could buy that stock, buy an out-of-the-money put, or buy the ETF, the GLD ETF. If I'm looking as more defensive, if I believe gold's going to rise because it's a safe haven, buy an out-of-the-money put and sleep better at night, and you have a nice defensive position.
I'm going to help them sleep even better. Do you see that big dip in gold as part of the COVID collapse? What that was, guys, was a run on the greenback, okay? That is not likely to happen again when the dollar is now 96.
Yeah.
The dollar was on its hottest run in more than a decade during that, because everybody wanted to get their hands on the greenback, okay? That ship has sailed at this point, and we shouldn't see that kind of phenomenon again for quite some time.
That's because back there I was telling them about UUP at our
Yeah.
panels.
Yeah.
And now you're right, because the dollar is not going to be the safe haven.
Nope.
All the more reason for GLD. You want to do it as a defensive measure. Buy an out-of-the-money put, you sleep well at night.
Yep.
Have you trademarked COVID collapse?
We
'Cause
should.
I think we should. That's
We should.
catchy.
Yeah, we should.
But yeah, only thing is, it's just kind of flat compared to some of the other candidates we've looked at.
Go UGL.
Yeah.
Yeah, so if you want to leverage that, guys, go UGL and then UGLD. 3-time leveraged on UGLD. But again,
Buy deep out-of-the-money calls on the triple leverage. You'll do great.
Deep out of the money call on
Deep
triple
out-of-the-money
leverage.
call on
Yeah.
triple leverage.
That's the recipe.
That's my hot play.
Buy GLD, guys.
All right.
Buy GLD.
All right, before we move on to Patrick, if you like the content that we're giving you today, and this is your first time here, please, folks, just subscribe to the page. Don't forget to comment and like. Like to see some likes today. All right, especially if you're liking the commentary. So,
I got to do my course.
Say again?
I got to do the course.
oh yeah, go ahead, Steve. I'm sorry about that. Steve's got something else to say.
All right, so I'm the guy that just won't get off the screen. That's who I am today. This won't happen again for a while. No, we've got a great course coming down the pipe. I can speak firsthand from this as I am one of the primary teachers of this course. The person that will join me on this course, his name is Jerry D'Ambrosio. The two of us are the ones that teach it. It's called How to Trade Like the Pros. Okay, this website, you can get there by going to www.vectorvest.com/pros. P-R-O-S. Okay, now, what we cover in this course, the first thing you got to be able to do if you want to be able to trade like a pro is you got to learn to think like a pro. So we go into great detail about how pros think. We look at some of the common threads in sort of their intellectual psyche and makeup and trading strategies, if you will, and how well they manage risk. And we look at the commonalities and point you in the right direction in terms of breaking into that mold, or conforming to that mold, if you will. The second thing that we're going to really focus on, and I think really the highlight of the course, are going to be the actual techniques. We're going to show rock solid technical trading setups. You're going to see everything from minute charts, where you can literally be in trades for minutes, all the way up to trading setups where you can be in trades for many months, just depending on the individual and the technique that we're teaching. So we're going to be featuring strategies from Linda Bradford Ratchke, from Larry Connors, and from Charles Schopp. Okay, and there are some bearish setups and some bearish techniques in there. They may come in handy in the coming months, who knows? So it is a course in which we teach you how to go long and how to go short the market based upon market direction. Final thing I would say is the risk management piece is invaluable. If you're going to be a great trader, you got to know how to manage risk. It's your lifeblood. It's what keeps you alive, and you're inevitably, no matter how good a system is, even the systems in this course, you're going to hit a bad cluster. You're going to hit 5 or 6 trades in a row sometimes that don't go the way they should. So the nice thing about this course is every single technique that we teach, there is a way to manage that technique to survive, to get to the other side and really make a lot of money. you know, if you do things right. So it's a great course. We've had professional traders come, people that have traded actually in the pits with Linda Bradford-Ratschke, for example, have shaken down the course. They love it. We get the most positive, at least on the ones I teach, we get the most positive feedback from any course that I teach here at VectorVest on this one. So if you're interested in learning trading and you're interested in learning techniques that are going to set you up for success, this is the baby. www.vectorvest.com/pros. I am done.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.